Okay, folks, welcome back. This is the ICT Mentorship Weekend Edition of the ICT Mentorship, June 28th, 2020. So we have a dollar index chart here. This is our daily. And I'm just going to go through this rather quickly because we have some lessons to cover this week, so I don't want to inundate you with too much information because it's already a late upload on Sundays as it is. So we're going to stay on topic and get through it as quickly as possible. So daily, we have the volume imbalance we've traded up into here, and we retraced, blew out sell side liquidity here, only very shallow, but that's enough. And I'm giving the market the opportunity to still more or less expand up and get into this little area right in here. So now all I'm going to do is take this, put it right there, this there. Now it doesn't look like much, does it? It doesn't look like much at all, but that's enough for the market to want to expand above these relative equal highs. Think like this low here, how we dipped below it just a little bit. It looks like it wants to try to at least make a run above here. Now if it does, then I'll be looking there. If it makes an more or less an exaggerated run, okay, you can see there's a small little fair value gap right in here, and if it runs aggressively through that, we have another one right in here. I'm just going to add a little trend line here on the discount end of it. All right, so it's this low, this high, that's your next fair value gap. This is a very small one. There is this volume imbalance down here that we passed through. Now we did fill it, but we didn't rebalance it. So it could come back down this week and trade into that volume imbalance again and become a point of interest for additional analysis and trades. But if we lose the volume imbalance, in other words, if we trade down through it and come back up into it and act as resistance, okay, that's IPTA, not support and resistance, not supply and demand, not harmonic, not Elliott wave. I know, I get on your nerves with all that, but it's in me. I got to get it out. If it stays in me, it's toxic, so I have to get it out. So we do have relative equal lows in here. So if we lose the volume imbalance and don't take these out and come back up in, that could be a potential setup as well. And I don't think it would just run below here and go higher. I think it would run below these lows and then attack this here and then make an attempt to get down here. But again, that's a lot of forecasting, and we're going into the end of the month and the beginning of a new month. So we have our standard procedure of trying to get our trades in before Wednesday's New York Open. That does not mean force a trade. It does not mean I have to get a trade. It just means that we are doing our utmost to do a setup by Wednesday New York Open, because the odds fall off precipitously after that point because we go into non-farm payroll conditions. All right, dropping into an hourly chart, you can see we have the market reaching above this short-term high here. It came back down, rebalanced in here, a couple different down close candles. I don't want to see it break lower. Okay, I know I teach trend line phantoms, and while this looks really nice and looks real pretty, drawing all these lows together, I don't want to see that break here. I want to see it making another attempt to go higher, and you'll see when we get to Euro as to why I want to see that occur. But dropping into another lower time frame chart. All right, so here's the 15-minute time frame on the dollar index. You see a really nice sell model in here. And notice if we use this as the consolidation that starts it, and then here's the price leg higher, smart money reversal, low risk sell. We did not get down below this little consolidation or sweep this low here. We still have a little bit of fair value gap in here, a lot of down close candles consecutively there. That's that reaction you're getting. But I like the idea, this low being higher than this low. So if we do break down, okay, assuming devil's advocate, okay, we'll play that here. Assume that this area here gets broken. This could be the catalyst that sets up a low resistance liquidity run for the dollar trading below those lows. Gun to my head so that way we are understanding one another. I am initially looking for the market to go higher on dollar. I want to see it try to make an attempt to go higher. It may not do it. It may completely fall out of bed right from the beginning of trading today. Okay, I'm allowing for the market to create a higher high on the daily chart for the dollar index. And it may not. It may stay sideways and still allow the euro to trade where I'm going to cover now. So let's go over to that. All right, so here's the euro dollar. It's our daily chart. And there's a couple things I want to bring to your attention. We have the very small fair value gap that resides on this candle here. That's what's being shown. And then we have the relative equal lows here. So we have a sell side liquidity pool resting right below there. I like what we did on Thursday. I like what we did on Wednesday. Friday, somewhat of a quiet day. It's an inside day. An inside day is a day that has a higher low than the previous day's low and a lower high than the previous day's high. So this is more or less compression. Okay, it's like that spring analogy I use where you're compressing this metal spring tighter and tighter and tighter, and then finally you let go of it. What's going to happen? Animation. It takes off. You don't know really which direction it's going to shoot out of your hands, but you're getting movement. Okay, you're getting volatility. I'm allowing for the dollar to go higher or stay sideways. It's fine, but I'd prefer it to go a little bit higher. And I want to see euro take out this low or these lows here and trade into here. Now, it might just go down here, hit that, and then get a reaction and start to move higher, and then the dollar break down. That might be a scenario that we see going into Sunday, Monday. And again, I don't really particularly care which direction the market moves this week because my frequency is going to be very, very low. I'm not trying to do a lot this week because this is the week of the month where we don't do it. Okay, so non-farm payroll conditions on Friday, Thursday and Friday, those are very, very low probability days. And we don't want to be in there trying to chase something just to say we took a trade on Wednesday. If it hasn't given you an opportunity or you missed an opportunity, there's absolutely nothing wrong with that. Forge patience by sitting on the sidelines and waiting after New York open on Wednesday if you have not taken a position. If you do assume a position, then we like to take about 70-80% off on Wednesday and then manage the rest of it and see if you can get a little bit of a runner out of it. But most of the time we're basically moving to the sidelines and taking our positions off and allowing the market to trade on Thursday and Friday as it will. All right, so here's the hourly chart on euro. And I'm going to scrunch this up just a little bit. There we are. Now, I like this right here. I like how these equal lows are sitting right there. I like the fact that we hammered into this level here and then came down, came back up again, didn't take out the high. I like this movement here. I do not want to see a gap opening higher. I don't want to see that. I'd like to see a gap lower, come back up and rebalance, and then aggressively run below the 111.70, 111.60, and that would allow the dollar to stay firm to slightly higher. That's all I'm trying to see if we get initially. Okay, so I want to see those signatures make their way into the price action at the open, and then see how we deliver after that. But I like the idea of it going below here. Cable, or British pound versus US dollar, has moved a lot compared to euro, and I just think that even though, and we'll cover euro pound in here before we close the video out, but I do believe that euro at some point will want to get back in sync and close the gap between euro dollar and pound dollar, and you'll see that when we get into cable. Let's drop into a 15-minute chart. All right, so here's the 15-minute time frame. Consolidated a lot on the 26th and 25th. Nothing really exciting happened in there, but I do want to see it break down and go lower. That's, again, the initial reactions in the marketplace once we open on Sunday, trading into Monday. I want to see that. I don't want to see anything above this high, because if we do, then we're going to most likely clear all these highs here and rebalance to this fair value gap and breaker. Okay, so there's a lot of things happening right in here. So if we take out this high here, that's probably going to send us up into here. And it doesn't mean that it can't go lower and below that 111.70, 111.60. Once it gets here, it just means that looking for what I want to see, I don't want to see it trade above here. I want to see it break down, maybe give a fair value gap, do a institutional order flow entry drill to get short on euro, and look for a 111.70, 111.60 area, again below those 60-minute relative equal lows I just mentioned before we dropped into the 15-minute time frame. All right, so let's go into cable, take a look at that pair. All right, so here is the daily chart of the British pound, or cable as we call it, and we had a nice little reaction here off of the order block. So we came down, filled in this fair value gap here, traded to the bullish order block, bounced, and where did it bounce to? Traded into this SIBI, sell side imbalance, buy side inefficiency. It's just a fair value gap, okay? And the body's beautifully respecting that. And then we have a reaction down here. I want to spend a little bit of time in this video with this fractal right there. Now, a fractal is a small little segment of price action, and we go into that specific portion of price and study with greater detail. So I want you to look at this. Okay, so we have the down close candle, and then we have the fair value gap that I'll put these levels on here. Red. All right. So now, what am I looking for? I want to see it stay below these lows. I don't want to see it take out Friday's high. So everything below Friday's high stays heavy on cable, and we'll look to see if we can get down below these lows in here. These are relative equal lows here, and then if it gets there, it's most likely going to sweep this low, and then we'll have to consider some of this over here. All right, so here's the hourly British pound versus the US dollar, and you can see that reaction here off the order block. Trades up, comes back down into another order block, rallies away, trades almost into that fair value gap. Remember the two red lines I just added? It was trading up, reaching up into that to rebalance. It hits it here once more, drives lower below these lows here into this fair value gap, rallies again, relative equal highs. They take that out, and it consolidates around the top of that fair value gap. Then it breaks down. This is what I like to see. If I have a reason to anticipate some bearishness, let's say, okay, say I think that there's a market move that's going to set up a sell scenario, okay, or it's going to enter a sell model, market maker sell model. That's what this is here. And I want to see it get to the level I think is going to act as resistance. Okay, it should not go any higher, and start showing me signatures of that being the case. Then we have a sharp move away from that level. That down black candle, that is our sharp move. The next candle here, we open and close, and then we have what? A gap. This candle's low, this candle's high. The market trades right back up into it, fills it. This up close candle is your high probability bearish order block. My order block, the ICT order block. It's not an institutional candle. It's not a sniper candle. All these goobers out here that are renaming my stuff, you have no idea what's coming for them. But anyway, the fair value gap in here, it trades up into it there, and then we see displacement. Bang, it hits it. Runs below the relative equal lows, spends time below that, comes right back up, and what is it hitting? Remember what I marked out on the daily chart. This is that fair value gap that it was going to reach up into from the bullish order block. The blue line trading up into the two red lines. Between these two red lines, it's filling all of this. It's rebalancing and spending time. So the algorithm is allowing traders that are in the know at the bank level, not UBS, not Citi, okay, and not Goldman Sachs boys. They don't know this stuff, okay? They might be in here now learning, but nonetheless, they don't trade like this. So it's the upper tier traders are trading this, and when it trades back to the bottom end of that fair value gap, that's why you're getting this reaction here. Okay, if you look at folks that look at support and resistance, okay, they would say, well, here is a low and here's a low, so we will draw a line on that, and if it trades up into that, that is support broken, turn resistance. Okay, the problem with that is unless there's a real narrative like I have here with the fair value gap, that is context. That is the real substance behind why the market's going to be reacting the way it does. Then, if you want to look at levels like this and say, okay, this is a support level, broken term resistance. If you have narrative behind it, as I'm showing with institutional order flow, as I teach it, which is the reality of the marketplace, not some contrived retail business, then these levels will work. But notice it's not hitting the levels that create these lows. It's trading through them. What is it really reacting to? My fair value gap. Okay, so that in itself really cuts to the bone, really, of what really makes these markets move around. And once you have the fair value gap defined like that, again, retail traders are going to look at this. I'm going to put this line here and make it real thick so that way you can contrast what retail logic would be here, okay? Because they want things black and white, and they're not black and white. There's a gray area that you have to understand, and being comfortable in that gray area. The gray area is this. This is your classic support and resistance theory, and it's trading through that. And when this candle was a bold up closed candle, or it hasn't closed yet, but it was a bold up candle, at one point at the candle's high, this body was sitting right there full on green or up. When traders see that level like this, support, broken term resistance, and they start screaming up like that, they don't feel comfortable. That's not what they don't want to see that, okay? You're being trained to allow for that and look for the very thing that should be occurring, which is what? Look to the left of that, right there. See that? This is what you're being trained to look for. You may not feel like it, you may not understand that that's what's going on, but every week when we spend time together, I'm teaching you by examples over and over and over again that this is what the market's reaching for. This candle's low, 124.63 and 9 pipettes. So basically what? 64, right? 29.64. What's this candle's high here? 124.64 and 7 pipettes. So it just goes a little bit above this candle's low. But look what it does. It reacts there and then bangs into that fair value gap again level. Boom. Then you get this. Oh, now remember that support broken term resistance? Okay, now it works because all the real work has been done here based on the fair value gap that I've outlined. All right, so there's a lot of value in hindsight, and a lot of the new members, and I'm just going to toss this in here because there's a lot of you that just came in month one, and when you're in month one content, you want to come in and you want to feel like you understand something right away, okay, because you're paying for something. But the problem is that some of you guys and gals are coming in with unrealistic IML type expectations. Okay, they put all this crap out there. You're going to be a super trader, you're going to be a six-figure earner, you're going to be this. I don't do that. I promise you're going to work. You're going to be taking copious notes, and you're going to have to be doing a lot of personal study and lots of video work. Like, you're going to be looking for things and studying. It does not happen overnight. That's why my mentorship is minimum whole year, because if you can't do that, you can't be a trader. And that's just the bottom line. I mean, that's the bottom line. And don't feel bad if you can't do it and you feel like you got to quit. No problem. You can't cut it. No problem. But I warned everyone when they came in, this is going to require work. And the process is you go through the lessons, you watch the commentaries, and when you have a question come in your mind, don't run to the email and say, Michael, answer this for me right now. Because I'm going to answer you 99% of the time. The things you're asking for are going to be taught in later lessons. And I'm not going to jump you ahead and fill in that insatiable desire that you have just because you paid me your first month's payment. That doesn't entitle you to month 8 or month 9 or even charter level. Okay, those people went through the process just like you're going to be expected to go through it. And right now it's exciting, but then you get in here and you start working and you start studying. You're like, wow, this is a lot more advanced than I thought. Well, yeah, we're not on YouTube, folks. Okay, I'm teaching you. You're learning what the upper echelon knows. This isn't common knowledge stuff. I mean, this is stuff that's really going to separate your results from that of what everyone else thinks is just good. You do not jump into the email box and ask me questions that are going to be answered if you just go through the process. A young man just responded to before I sat down and do these videos today. Sends me and says, hey, I'm month 1 and these lessons seem a little bit advanced in the commentaries and I'm not quite sure what I'm supposed to be doing. Well, you're supposed to be having a study journal, number 1, all of you. And what you do is you create topical study areas in that journal. It might be basics, core content. And then you subdivide that into time of day studies, SMT studies, the specific patterns, and you break those patterns down because you learn a lot of different patterns, and some I haven't taught yet. Like you learn Artemis here, you learn obviously breakers and all of the standard ICT core content stuff, but you'll also learn other things that I haven't taught yet. And when I introduce them, they're never completely, explained the first time I introduce them. For instance, when I brought out fair value gap, when people see that in the core content, they're like, oh yeah, there's really nothing to that. And they weren't really impressed with it until I started using it every single time we went into commentaries. And then they're like, wow, I see this everywhere. That's mentorship. That's what I mean. There's all these other tools that you've just brushed through when you go through the core content lessons. That means the 12 lessons that you pay for. Then you go to your charter and there's no more payments after that. You still are going to be learning new things. And because I'm forcing your perspective with using 1 or 2 or 3 different ideas, I'm showing you how you can build and frame your own model without having to have everything in my repertoire. Just because I have a huge arsenal of tools does not mean I'm bringing everything with me every time I sit down in front of a chart. I'm working with what the price is giving me, and then I work out the narrative. What is it doing? Why is it doing that? And it's basically what I just did here for you here. So anyway, just know that it's work. And there's no shame if you got to tap out and quit. But just know that there's nothing like this. And you can see it. It's not contrived. It's not made up stuff. It's really happening. It's really that precise. And it's nothing like it. And I haven't even scratched the surface yet. So buckle up. Enjoy the ride, because we're getting ready to go into some really interesting things. But the low here, that sell side liquidity, resting now below that bullish order block, the initial reaction there, we traded down through that. So we had a consolidation, smart money reversal, low risk sell, distribution, redistribution, and then we break down. This doesn't look like a perfect, example of my market maker sell model, because you're used to seeing me have a very beautifully outlined with all the boxes, all the things lined up for you. But you have to study this particular fractal to understand how good this is. If you scrunch it up a little bit, you can start to see the characteristics a little bit better. But when you spread it out, it kind of like makes it a little bit harder to recognize. And also what you end up learning if you start going through the core content and get into the other commentaries and charter level too, all the time that it's spending in between this high and this low, between this high and this low, that's the range. All these candles in here that it's just knocking off time, it's just treading water. All of these individual candles in here don't mean anything because the narrative is already set by this candle's high and this candle's low. And I already know you're thinking, what do you mean by that? And you're already wanting to send me an email. What did you mean by this and this? It's explained in a charter lesson. Okay, I cover this whole business in here and relative to time. Because when you look at charts, for instance, this interval is a 1 hour chart. That means every candle represents the highest high and the lowest low and the beginning and end of that 1 hour interval. What price did within that scope of time. When I teach time and price, okay, it's not just simply a kill zone reaction. It's not a London close target. Okay, it's understanding what is price doing within an element of time. So when you understand this fractal, this pattern, okay, a market maker sell model, which we teach and cover a great deal, much more than I did when I did my Scout Sniper series and Market Maker series. You learn way more here about what this fractal is doing. One of the things you need to quickly dismiss is the importance of one time frame over another time frame, because you want to go through the time frames that's available to you in your platform, and you'll find the signatures that I teach you, and that's the time frame you trade. Some of you are coming in here saying, ICT blows up an account with 1 minute charts. I'm going to do the same thing. Well, you don't need a 1 minute chart, and there's nothing really specifically inherently better, okay, or advantageous about a 1 minute chart. It just proves mastery. That's all. It just means that I can see it on any time frame. You, as a student coming in, especially the month 1 folks, maybe even month 3 or less, you came in with this idea that you're going to be a 5 minute trader, or you're going to be a 60 minute trader, okay? And you're going to force yourself into that. And to do so, that's going to be a problem, because what you think you know coming in to this mentorship needs to be forgotten. You need to leave it at the door, because all of your preconceived ideas about what you think you should know, how you should learn it, what the market does, maybe you have some pet things from previous mentors or previous schools of thought. All of that stuff is junk. It's junk. It's all going to be in your way. And you have to purge that stuff from your understanding and give yourself a clean palette, because I'm going to be painting a masterpiece. But if you constantly want to bring in graffiti, you're never going to really appreciate the fine art that I'm giving you. So in this fractal here, when we see all these smaller candles in here, there'll be people on YouTube, there'll be people on Instagram, there'll be people in Facebook, and all these other mediums, okay? And they're going to think and pretend that they see some value in these candles here, or these candles over here, okay? And attribute that to a order block, a breaker, a mitigation block, something that they've heard me say, a buzzword, and add smart money concept to it. And they'll think that they're fooling other people. And none of these candles have any influence on what's price is doing. None. Just like these don't either. It's this candle here and this candle here. Why? Because that's what the range is relative to the buy side of the curve over here. The highest high is here. That's the curve. To the left is the buy side of the curve. To the right is the sell side of the curve of the market maker sell model. Everything that's important over here has to line up with what's important on the left side. That's the secret. That's the sauce. That's the hidden gem with my fractal. That's why it's not Wyckoff. That's why it's not anything like this. And you're going to learn other elements that match up on both sides. And you'll also learn when is it going to come down here and then not break this low, but continuation on the upside. You'll learn how to discern that too. I haven't taught that lesson yet. So charter members are scratching their head. Hey, where do I find that at? I'm going to send ICT and us. Don't, because I haven't done that yet. I'm only training your eye to see this pattern. Because if you can see that pattern here, you have a career. Absolute huge, huge career. Because if you understand the mechanics of the likelihood of a bounce here, trading up to inside this fair value gap, you have a myriad of setups available to you. You can buy it here. You can buy the optimal trade entry in here. You can buy in here with a fill here. You can sell the reversal. You can sell the reversal. You sell the reversal. Sell the reversal. Sell the reversal. How many trades is that? When you understand this pattern, you'll be able to excel in price action model number 6 and 7, which is basically, like I mentioned when I did those lessons, they're the closest thing to how I actually trade myself personally. Like the approach I go to when I sit down in front of the charts, my mind goes through more or less model 6 and model 7. Now I already know some of you are coming in here writing down, I'm going to master model number 6 and 7, and I'm going to be, don't do that, because seriously, there's so many other models, and just because I am explaining that I do well with the ideas that taught in model number 6 and model number 7 does in no way diminish the other models or their efficiency, because they're all good. You want to go to one that more or less makes more sense to you, that you can see clearly. Now, model 6 and model 7 is not easy. And like I said, that's out of the 12 models that you learn here, you're not limited to 12 models. I mean, I could literally make 100 different price action models, and they would look nothing like one another, and they'd still pull out trades every single week. That's the beauty of understanding IPTA, because we understand, once trained to see it, we'll know where these signatures will likely occur, and because they repeat and they do the same things each time, they are reliable. They're reoccurring. And if they're reoccurring, they're not random. And if they're happening by time, they're certainly not random. And if they're going to a specific predetermined price, that cancels out any likelihood of randomness. So that's exciting. That's very exciting. And if I would have understood that in my 20s when I first started doing all this, I'd be a different ICT. I'd probably be a monster. And I know I would have. I would have been insanely more profitable, much more probably well known, because I probably would have been picked up by someone early on. And then there you go. But everything is for a reason. And I'm starting to ramble. Remember that short video I promised? Anyway, let's drop into a 15-minute time frame. Okay, so you can see a little bit more detail with the run up and distribution. Everything over here that becomes a buy matches up with a sell. It has to happen that way. If it doesn't, then you're trading on the wrong area, the wrong levels, on the wrong side of the curve. And I already know you're new and you're hearing me say all these things, and this isn't making any sense. I need to watch a video so I can go right into a chart tomorrow or tonight in London and be able to click and trade. That's not what we do here. You want to be able to independently think about what you want to do, not me outline and point to. Do this when it gets here and do this when it gets there. That's not how you teach someone how to speculate. That's not how it's done. That's how you teach people to be codependent, and we don't do that here. You want to be independent, and I'm going to teach you that, but you have to trust the process. The people that made it, they trusted the process, and I didn't do anything special for them. There was no extra hand holding for the people that are in charter members that are able to do this, that are carving out a living. Some of them have moved on to do bigger, much bigger things than I thought they were going to do. And they're impressing themselves, and they're blowing me out of the water with what they're able to do with just a small portion of what they learned here. And it's a lot of content. But your eyes and your understanding are going to gravitate to things that mean something more significant to you. And it does not diminish any other facet of this mentorship. That's one of the beautiful things as a mentor I'm appreciating, because the lessons are going to speak to you in a way that makes the most sense for you on an independent, personal level. And because it's based on truth, not fabricated nonsense in a retail book, you'll be able to see something that is absolutely 100% valid, and it reoccurs, and you can see setups well before they develop, anticipate them, engage them, and capitalize on them. And know that that thing that you just did will repeat again in similar fashion. And that, to me, is exciting. At least, from my perspective, it should be exciting for you, because the things that we share here every single week, they repeat over and over and over again. You may not see it. You may be frustrated because you didn't understand or see it at the time, and you required me to point the way. But that's what you expect, right? You want to be able to have someone show you what it looks like, and then show you how it works conceptually. And then what you practicing and seeing lots of examples of it and logging all of them in your study journal, you will recognize it when it starts to form in your charts live. And when that happens, I can't articulate the feeling, but I can tell you it's orgasmic. It's 100% euphoria. You feel so empowered because you know what you're looking at is about to unfold. And then when it does, it's a peacock feeling I joke about with all the time. When my wife can just tell when I'm getting ready to start prancing around the house, because she knows me now. She knows I'm in a move that's making a run to a target, and she knows what's going to happen. But that feeling when you're a new student or a new trader and you see it, then you're baptized. You're absolutely baptized in a state of mind that can never be stripped away. Now, you can hurt it by over trading and pushing it too hard and trading when you don't have the setup. In other words, you're forcing through impatience the idea that you think it's there because you want to be short. And I got a lot of emails in the last 2 months or so with relatively new students that came in. And they're like, I'm seeing all this stuff forming and I'm taking trades and sometimes they're perfect entries and I get scared because it's retracing against me and I get out and then it runs to where I thought I was going to go and I feel demoralized. Well, first of all, you're feeling that way because you're trading with live funds, which is what you're not supposed to be doing, because all you're doing is teaching yourself bad habits. You're worrying about the money versus are you seeing the same signatures in price that lent to you getting into it? What made you take the trade? Whatever that is, as long as it's still valid, you hold the trade or let it stop you out. Learn from that. Know what it feels like to be stopped out and then find another setup. And when that pans out, you can say, well, I took a trade. It felt right. It stopped me out. It was wrong. I don't care. It doesn't change anything. The model still works. The model's not 100%. There's no model in here that I'm teaching that's 100%. It doesn't happen. It doesn't exist. That does not exist. You're going to lose. And trying to do everything within your power to try to avoid losing, okay, that is a fallacy. You can't do that. And I understand what you're doing because I tried to do that too. I thought that there was going to be a guy or gal out there that could do this exceptionally well and not lose, because some of the books I bought gave you the impression that that's what everybody did. Where's everybody's yachts? Where's everybody's mansions? Okay, it doesn't work like that. So by understanding certain principles and certain times of the day and certain days of the week, using the economic calendar and understanding liquidity, you will start to see things that will become very, very clear that are just hidden from you right now. Not because I haven't taught it. You just haven't gotten to those lessons yet because it's taught. But then you have to go in and do the exercises. When I tell you to go into your charts and do this with your charts every day. Every single day, you should have multiple charts saved in your journal. Your daily chart, your weekly, daily, 4 hour, 1 hour, 15, 5. They should always be there. And, well, that's a lot of things. If I want to watch 28 markets, Michael, I'll never get anything done. Right. That's why we don't talk or teach follow 28 markets. That's why I only do euro and cable and dollar, because this is what I do. This is how I make my living. I don't care about all the other crosses because I can find whatever I need just in the euro dollar, even when it's been really, really small, tight ranges. I can get 10 pips a day and there's 50 pips done. It does not matter. That's what I'm trying to tell all of you. You come in here and you have these preconceived notions about what success is in Forex. It's 100 pips a day, baby. If I'm not making 1,000 pips a week, then I'm not winning. Or if the trader that's teaching you, the mentor, the guru, isn't making 20% a week, he ain't worth this salt. These people aren't making money. Those people have no idea what they're talking about. I'm teaching you the lowest threshold of what would be required to find profitability. If I had said, I'm going to teach a course and I said, look, I'm going to sell it for, I don't know, $650, and I'm going to guarantee you a reoccurring system that will, on balance, on a net basis, give you 50 pips a week. By itself, that sounds great. You're like, oh man, I'm sign me up. But if I added that we only take 10 pip trades, how does that make you feel? For some of you, like, ooh, I'm not doing that. 10 pips, ooh. Others are like, that's about right. We all can't see which each of our reactions are with that. But if we were in a group setting in a room, you could see, look around and start seeing people nodding their head, like, yeah. Or other people like, nah, it ain't me. Why? Personal taste. That's all. That's all it is. Because I can take 10 pips and grow that up to 1,000 pips in a month. Now, that's me. Some of you may not be able to do that. Others may think, wow, I never thought about it like that. And now that's going to be your pursuit in life. That's your career. I'm not stating that that can be done consistently. I'm just saying that the perception about what you think you should be able to do, or what's the correct or successful route in doing all this, there isn't any one cast in stone approach. What is truth is how the market's delivering in price. That's the truth. That's what I give you. That's what I show you, and I prove it every single week. But as a mentor, I cannot take everyone and press them into one unique model or mold and say, you're going to trade like this. And it doesn't work that way, folks. And it sounds like a bunch of nonsense. Like, oh, come on. But it's the truth. You cannot take this idea of speculation and the things that I'm teaching and make everybody submit to it. That's why I teach in an all-encompassing way of doing it. It's, you can pick and choose how you're going to engage the marketplace. And even though some of you may be going long in a particular currency, others in here may say, okay, I'm going to scalp this the other direction. And you may not even see that trade as something that's noteworthy, but they're carving out a living. And so are you. And you're doing the opposite. These markets are huge. There's so much liquidity available, so many opportunities. All you have to do while you're going through the 12 months is just follow along in the lessons and let the progress take its course. It's just simply training yourself, learning the language I speak, and then when you get into the charts, you'll see things. You've been looking at this 15-minute chart for a couple minutes now. Do you see the optimal trade entry? Here to here, retraces back in. What's it doing? It's taking out relative equal highs, moving into a premium, and then it breaks down. Another optimal trade entry from this reaction high down to here, retraces, optimal trade entry, sells off. What if I don't get in there? Who cares? Use institutional order flow entry drill. What is that? I'm new, Michael. I hear you saying that, but what is it? Use the search function in the forum and you'll find it. There it is right there. That candle, when it trades up to it, there, that's your sell. Your stop has to be above here. Simple. It's not perfect entry. It's bread and butter setups. Bread and butter still feed you. It's not filet mignon. That comes in charter. This is something I can prove, and you can see regularly every single day. That's why I taught the same things that you see in month one continuously throughout the commentary, because it's the first thing you were introduced, and it proves that what I'm showing you is real. It's valid. It's not hindsight. It's predictable. We can see it coming. You'll still have losses. We'll still miss moves, but you can still find setups, and you don't need to subscribe to a signal service. You don't need to join some private group. Okay? You're learning everything here that you would ever want to learn. But you have to trust the process and know that 99% of the things you're going to come up with a question, I have already more or less expected and anticipated those questions, but they're delivered in ways where all the supportive lessons that come in at the times they do, they support one another. And then when you go back through the previous months, because you should be doing that too. And I had guys, hey, I went through month one. Can I pay early? No. Go back and watch those lessons again because you didn't retain it. There's so many things in there. And Lord forbid you think you did that one pass through month number 5. There's so much stuff there. You're going to get killed. There's so many lessons in that one particular month that you have to know. But when you go through month 5, you got to go cycle back to month 1. And then you'll start thinking about things differently that you didn't really understand or anticipate seeing the first time you went through month 1 content or the second time you went through it. Because all these things will start to dovetail together. That is mentorship, bringing you slowly, because it can't be sped up. I can't take all of this stuff and make a video and say, here it is. Because it'll still feel lacking because it needs to be seen, experienced. having time over the charts, over my shoulder, I'm explaining certain things, saying this is what it looks like. This is why it acted that way. This is why I said it was going to go to that level, and it did. Okay, I'm not in here trying to make it harder for you. It may feel that way. It's only because of your excitement, and you feel like you want to get to the finish line right now. But you signed up to a community. This isn't a first month you know everything. It's not a go through the charter membership level and you know everything then either, because that's when the real learning starts. Because you have all the core content behind you, and now you're introduced with a higher degree with price action models, now trading plans. And those trading plans, like I said, if I put them on month one, it would mean useless to you. Meaningless, doesn't mean anything to you. But the folks that go through the mentorship content and study and know what they have been introduced to can look at those trading models and say, oh yeah, now I understand the trading plan. With that trading model, I have a complete entire method to go into the marketplace and fleece it every single week. But too many of you come in here with an impatience that is unrealistic. And you're either going to be broken and conform to the progress that's required, or you're going to ring the bell and exit. And either way, it's okay, because I'm not trying to twist anybody's arm to stay here. I don't need your money, but I do covet your story. I really want to know your success story, and I'm seeing a lot of them, and I want you to be just like that. And I'm interested. I want to know what you do. How do you transform your family tree with this? What are you going to do with your children? How are you going to make it available to them? Some of you, are anxious to be the next internet celebrity, and that's cool, I guess, as long as you're not teaching my stuff. I'd be behind you, rooting for you too. I just don't want you to be a clone of me, because I'm not flattered by that. So anyway, I had to include that rant because I didn't give you a video on Friday. I have an excuse for it one way or the other, right? So anyway, take the sell side liquidity out here. I want to see if we come and go a little bit deeper, maybe again with that same assumption. I'm allowing for $1 initially, see if it wants to get a little bit higher. That would allow for cable to go a little bit lower. I don't want it to see it start to drive aggressively lower. And the reason why, that would be just indicating that euro pound wants to go a little bit higher. So let's go look at euro pound real quick. Folks, here is the euro pound, and you can see that we have a sell side liquidity pool resting below here. All of these relative equal lows. Sell side liquidity, market trades down, as I mentioned by previously discussing this here, and the market trades back up into a fair value gap, comes back down, rebalances to the fair value gap here, and then explodes up, taking out the buy side liquidity. Now, I outlined all this whole business here, how it took sell side liquidity out. And that's why I mentioned that selling short on euro dollar was a high resistance liquidity run. The reason why? Euro is the first currency in this pair. This currency is bullish. So you have to look at cable. Is British pound breaking lower aggressively, being large candles on the downside? And is euro having difficulty going lower? Right away, that's your signature. Go right into this pair, and you can monitor it. If you want to trade it, I don't personally trade it, but you could trade long euro pound when it's like that. All of this business here is what I'm training you to see. Now, you cannot look at this example where I say, okay, it's going to run down below sell side liquidity here and then run back up in here, and say, okay, I watched him do that. I now understand it, so let me go out to a chart and try to do it. No, that's not what you're supposed to be doing. You're supposed to be taking that experience and say, okay, where else did this occur in history? Go back and look at price action, and you pour yourself into charts like that. When you're new and you're going through the core content, you should at least put an hour into looking at old data and looking at how, when prices are running, look at other supporting, or not supporting, but correlated pairs that would be signaling or canceling the idea of a particular price move happening, and start looking for things that would support what I'm teaching you in the core content. And right away, you will get an enormous amount of encouragement by doing that. And plus, you'll be training your eye. And once you see these things and you understand what it looks like, it's like riding a bicycle. You cannot be stripped of it. You see it, you understand it, and now you recognize it. for the folks that are in the United States, think of this green felted frog with big white buggy eyes. Right away, you're all thinking of Kermit the Frog. Great. Now, think of the big yellow bird. Right away, you went right back to Sesame Street like I did, and you're thinking of Big Bird because you have been exposed to it over and over and over again. Okay? For some of you folks that have no idea what I'm talking about, you're like, what the heck does this have to do with anything? It's the fact that you have been conditioned to see and remember a specific thing with very few little subtleties or signatures that would indicate that it's what I'm referring to, or that's the topic. And price action is no different. You have to see these little things and how they fit together that leads to a resistance run. In this case, low resistance, but high resistance for euro dollar going lower. It does not mean it can't go lower. It just means it's more likely to be met with resistance in its dropping. But in knowing that, and this pair is likely to go higher, it means that you have an easy sell-off coming in cable. So when you get short in euro dollar and you realize you're on the wrong side, don't hold on to that trade. Just get out of it, because you're holding on to something that's arm wrestling with the banks, and you're not going to win that wrestling match. Okay, so I'm going to cut this one here. We will go into daily rotation again with uploads again starting on Monday, and we'll do that until we get to Wednesday. Then we'll do our midweek review, and then we'll resume back on Thursday and Friday. I'd like to keep that day without having to do a daily upload. I enjoyed my time with my family Friday, and I'm going to ask you all to work with me in regards to that. I'm already doing more than you're supposed to be getting and more than you're paying for, so just work with me. Okay? But I got some really good lessons for you this coming week, and until I talk to you again, I wish you good luck and good trading. Be safe this weekend.